Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Charles Krawitz. He's the Senior Vice President, Chief Capital Markets Officer, and Chief of Commercial Lending at Alliant Credit Union. It's a lot of titles. Charles and I dove into a lot of stuff, starting with kind of the shift in product mix, different things consumers are demanding in terms of lending products today. We talked a lot about innovation, how you can drive innovation into credit union, what slows things down, what credit unions can learn from fintechs, and how institutions can not only learn from the things fintechs are doing well, but partner with them to bring some of those capabilities to their consumers. And I really loved his focus on starting with what the customer, what the member needs as your starting point. What are their desires? What are their wishes? What are their needs? And not being driven by the bottom line. I think it's a really important point in terms of financial services, how we start with what the customers really need and how we deliver that and build a business around it, as opposed to the business we want and then how we choose products or configurations or programs based on that. So it's a really interesting conversation. A lot of talk about how we get from where we're at to where we want to be. So please enjoy this conversation with Charles Krawitz. Charles, thanks for joining the podcast. I appreciate you making the time.
Jeff, I am absolutely delighted to be participating.
You actually sent over your own list of questions. This is going to be fun. We got good topics. Not everybody is as thoughtful about things to talk about, but I wanted to start. The topic of innovation is always a big one. What does it mean to innovate? I think particularly for a fintech and guys coming from the tech space, we get that question a lot. But what do you think it means to be an innovator in the context of the credit union space?
Sure. I think credit unions have been very member focused and have done a lot of things right for their membership base, but very few of them have looked to engage with the fintech world and to really understand the business model of fintechs, how they might align with the business goals of the credit union and best serve their membership base, and how to figure out how to work in partnership with those fintechs as you try to bring best practices from your organization to them and their best practices and their ease of transaction to our members.
Let me ask you one question on that, which is, why do you think that's not more common? I mean, it's interesting to me. I think a lot of FIs tend to see fintechs as doing things like the Wild West and cowboys or as competitors versus partners. But why do you think there hasn't been a more constructive engagement? Because it seems like a natural thing, particularly as you mentioned for credit unions, where the focus on the member experience and the engagement of the member is really more at the forefront than it is in some more traditional banking institutions. And so I'm curious why you think that's been the experience that you've seen.
I think credit unions have been relatively insular. Innovation has come from collaboration within the community, and fintechs maybe are perceived as kind of the other. They are outside generally of the credit union space, and so are not looked to as kind of go-to partners.
That's interesting perspective. I'm assuming you view that differently. Given that you brought it up, how do you think about that relationship between credit unions and fintechs, and what you look for and how you can engage with fintechs to improve your experience as a credit union?
Well, I think also fintechs maybe incorrectly have a reputation for being either non-compliant or maybe better said, creating compliance and regulatory challenges for a financial institution. And a credit union, clearly is going to be leery of that. We have certainly found that through engagement, we're able to talk to credit unions about our regulatory and our compliance needs, explain to them why, as a over $10 billion in asset credit union, certain things are needed, perhaps dotting the I's and crossing the T's in a way that they have not had to do with some of their capital partners in the past. Sharing with them and really kind of aligning on the benefits of a partnership with a institution of our size, and working on constructive change over time, not necessarily expecting our fintech or lendtech partners, if you will, to have all of the mechanics in place day one. but to have an understanding of where they're perhaps falling down, and a willingness towards to work towards an end destination, and one that is not in this very far off distant future, but one that is proximate, and to up their game, to allow for their product to be put in front of our membership base, for their borrowers to become borrowers of Alliant Credit Union.
So I think it's a fascinating model. And the question I want to ask is really one of the things I've experienced with credit unions and banks is that this kind of muscle of that active engagement, of that kind of back and forth with a partner like a fintech is, especially across different stakeholder groups within the institution, be it credit risk or regulatory compliance or legal, is maybe not, it's not a natural way that they're used to interacting with external partners. And so this kind of like muscle around partnering to find solutions or to close the gaps on, let's say, a regulatory issue, or to work through things. It's like a new way of operating in some ways for these groups. And I'm curious how you build an organization that is good at that and that kind of learns how to do that well, because it feels like an advantage to me to have that kind of capability, and yet one that for many institutions isn't totally natural or historically the way they've done things. So I'm curious how you think about building the organization that gets good at partnering with fintechs or outside organizations to do these kinds of things.
Mm-hmm. Well, I tell you, from the perspective of a fintech, some of them are more attuned to the regulatory and compliance needs than others. Some of them are pure tech people. They've got their algorithm, they've got their marketing strategy, and they're a little unaware and perhaps sometimes a little obtuse when it comes to the regulatory environment. But increasingly, I think they've learned that for them to have a prosperous future, they have to become our compliant concerns are their compliance concerns. Mm-hmm. And some of them will have a chief, capital markets officer, someone who probably came out of the banking space, or multiple people. Yep. That are part of their teams that came out of the financial industry and not out of the tech sector, to help them bridge that gap. And then from our organization, a realization that there is a way to rinse, wash, and repeat, to assemble an agile team that involves legal, compliance, tech folks, regulatory folks, as part of an agile team, and the lessons learned from one encounter make us better and more capable when it comes to the second, third, fourth, and fifth. And that's what we've done. Is that we've put together this cross-functional team that is very, very well aware of the right questions to ask, and the not to overburden a potential partner, but to be kind of smart in our interactions.
I think that's a great approach. And I think for the fintechs, if they're listening, or for the institutions that are curious, like the same thing needs to be done on the fintech side. Like I think we've certainly learned through our interactions with lots of partners about how do we rinse and repeat, get to a place where, we can anticipate the questions you're going to have. We've got the regulatory answers buttoned up. We've got the documentation that's required ready. We're, we kind of know how the process will flow, and not that they're not all a little bit unique and different and people have their own specific questions and concerns, but that, it needs to be viewed as something we're doing as a repeatable process, not a one-off thing that we do once and then kind of forget how we do. And I think if you've got that on both sides, then you've got a real opportunity to lower the burden to get these kinds of things done. So are there
unquestionably, and we have found that sticking with adjacent fintech partners has been very, very beneficial. So rather than having one partner that's, say, in the personal term loan space, to have two, perhaps three, rather than having one solar partner, to have two, perhaps three solar partners to take the lessons learned, and to be able to get some economies out of those lessons as we move forward.
Mm-hmm. Are there particular product areas you see a lot of opportunity in, or like trends you see that you think are interesting from just a product offering point of view?
There's definitely more concern about the environment. I just brought up solar lending. That is certainly an area that is top of mind for a variety of reasons. You have the wild fires in the western United States, or unfortunately not just confined to the western United States, and people are concerned about the continuity of their power supply. They're concerned about the impact that their power consumption has on the environment. And then they're smart, they're savvy, and they're interested in lowering their bill. And oftentimes, solar will allow them to save over their traditional utility bill. So that certainly seems to be top of mind with a lot of consumers. The green going green, extends to electric cars. And for a lot of the same reasons, particularly appealing as we're knocking on the door of $5 a gallon in gasoline costs.
Yeah.
Making that appealing. So I would say those personal term loans, the general ease by which people can. Let's face it, Americans like to consume. We're staying at home during COVID. We're looking around saying, wish that bathroom was a little bit nicer. Wish I had a deck or what have you. So personal term loans as a means of getting those things accomplished, getting the home improvement aspirations taken care of. And then, certainly there's wherever a borrower is, wherever a member is, kind of in their journey. Maybe it's to acquire an RV. Millennials having decided that they can work from anywhere, and an RV being a great solution, allows them to travel and see the country while still being able to work from home. Or if someone's retiring, an RV obviously is an interesting and oftentimes appealing proposition for retirees. So there's a focus, I think, more on one's kind of life journey within the fintech space.
Yeah, that's interesting. Do you see any like themes to those trends? I mean, you talked about environment. I mean, one of the things I think has been interesting between personal loans and BNPL is this kind of, personal loans for home improvement, as you mentioned, kind of replacing HELOC in some ways for some customers in terms of how they might have financed similar purchases before, and then buy now, pay later coming up as an alternative to credit cards as a financing vehicle for purchases of smaller amounts. Kind of this movement towards installment over revolving. I mean, both of those are kind of like a shift from a revolving vehicle to an installment vehicle. I don't know if you connect the dots the same way, or you see other kind of like big trends about how consumers are thinking about the kinds of debts they're carrying.
Yeah, I think we live in a world where there's a solution, waiting on our phone. There's an app that can give us a ready-made solution for something. And we're not necessarily always planning things out, but we're wanting that instantaneous, solution at our hand. And a personal term loan is going to allow you to get into a payment structure that at that moment in time seems right for you. HELOC, might be a little bit longer in the application process. A HELOC, I think, will take on greater appeal as we have rising interest rates, and you're not going to see that frenetic refinancing of homes any longer. So people are going to stick with their existing first mortgage, and those that are more planners are going to decide a HELOC is perhaps that lower cost solution than a personal term loan. And so some of the population will gravitate towards that. Some of them will gravitate towards, I see it, I want it, here we go.
Mm-hmm. Now, we talked about this because this is on my normal question list and on the ones you had thought about. So I'm curious your answer. What's a commonly held belief about consumer lending that you disagree with?
I think there's there's a tendency to look at lending as a product, that financial institutions, really look at lending with their bottom line in mind. And certainly at Alliant, we take a very different approach. Lending is really seen as a means of supporting our members and aligning with their needs. All about kind of the membership and their aspirations and objectives, keeping their needs in the forefront, and trying to find lend tech partners that are kind of capable of fulfilling those needs to a greater extent, and helping us with a product set that is transparent, that allows for easy price comparison, and benefits our members' financial journey, as opposed to this mentality of it needs to benefit our institution's bottom line, and that's the real driver, of things: member versus bottom line.
How do you make that a reality in the institution? I think a lot of bankers would describe their focus and their motivation for entering the industry as like helping people and making loans available. But it's so easy. There was an article I remember about somebody who worked at one of the major credit card companies, and they said like, well, I got into it for that. It turned into like a game where I could turn the knob, and my objective that the company gave me was to drive up utilization or whatever, right? And it was kind of like, I won't call it a video game exactly, but it became a numbers game where you could tweak the product to achieve a financial or a business objective. And it could become easily detached from the reality of those decisions as impacts on the customer, like on the end consumer. And so I'm curious how you think about, in that context for financial services, really driving within the organization this focus on what the member needs, as opposed to managing the program or the product, which in the context of the institution is really the portfolio and the returns and the financial results that it drives for the institution. How do you turn that into a reality within the organization?
Yeah, I mean, that's a fairly disheartening story, Jeff, that you told there. And I could see, where someone could lose that attachment to why they are in business. I think it's easier being a credit union than being a for-profit, quarterly driven, publicly traded bank per se. I think it's a lot easier for credit unions to stay focused on serving membership. And we do a great job as a broader credit union community, kind of reminding ourselves as to why we exist, who we serve, and what our objectives are. And our objectives are not, ratcheting up or tweaking terms and spinning the dials to maximize profitability of a product.
Yeah, it's such an interesting cultural question about how you drive that belief within the organization, because it's like, it is easy. I always worry about it for us, because we got into the business to make consumers' lives better, to expand access, to lower the cost of credit. But then you you sit in that credit meeting and you go, well, how's returns for the quarter? What do we do? And
so Jeff, we actually start every single meeting we have with a member impact story. So
I love it.
Someone comes to the table with a 5 to 10 minute story about how we were able to make the financial life of a member a little bit better.
I love that. We kind of read a borrower review every week at TGI, starting every meeting with that. I mean, it really does help you keep the focus on that member. I know one of the banks I talked to said they have a empty seat at certain of their meetings that's meant to represent, the member who isn't there, but that you kind of physically represent
that's a great strategy
in the room as a part of the discussion when you're doing those things. So what are the other areas you're focused on in terms of forging a different path than, maybe what is traditional for the credit union space moving forward? You talked about fintech partnerships. Are there either other categories of what you're trying to do internally that you're focused on, or are there focuses for what you're trying to achieve in the context of partnerships with fintechs that you think are kind of set you apart from the typical path credit unions are walking down today?
So we have I've started a little incubator program where we've reached out to some universities to have them as a cornerstone project for a group of grad students or perhaps seniors, and it's 4 or 5 of them. We're doing our first kind of pilot now, and so we kind of put the question in front of them as to, if we were going to go into the buy now, pay later space, what who should be a partner and why. Is this even a space that we should be venturing into?
Yep.
How would it benefit our membership? And so we're doing that right now. I'll be curious to see what these young innovative people think. And then we're about to start with a second and a third university, and different, slightly different takes on the same theme. As to your question, what should we be doing from an innovative perspective that would have meaningful impact on our members? And not always feeling that we have all the answers internally, but we can reach out to kind of a broader community. We talk to our credit union peers all the time to see what they're doing, what we're doing, what interests them. Do they want to buy participations from us? Do we want to buy participations from them? How are they approaching the market? How should we be approaching the market together? But right now, the areas, as discussed previously, very much solar, electric cars. We were one of the first movers with regards to Teslas, and that was a good proposition for us. And now there's all sorts of other names entering the industry, and we hope to be able to expand some of our early success with Tesla into other names. And I'm just amazed the number of fintechs that are out there, and how they're approaching the world. There's not a day that doesn't go by where where I'm not on the phone with at least one fintech hearing about their story, and how they're going to revolutionize the finance space.
Yep. Yeah. I want to dig into this interesting concept. I mean, I know credit unions have always been very collaborative amongst one another in a way that I think banks often aren't. And that's been interesting. But you talk about engaging universities. Can you tell me a little bit about like how you structure, reach out, like really work with those institutions? Because it's a different approach. I think it's really fascinating. There's a lot of great thinking going on there. The future customers that you want to appeal to are coming out of those places all the time. But how do you think about engaging with an institution like that and structuring that so you kind of maximize the learnings?
Sure. So the one that we're pursuing right now, and trying to learn more about the buy now, pay later space, is University of Illinois Chicago campus. And fortunately, we had recently hired a graduate from there, and I brought the idea up to him, and he said, "Oh, I know exactly which professor to approach." So we did. One of my colleagues, Rob Pirelli, is very active, an alumni of DePaul University in Chicago, and very active with them. And he is lining up kind of the next group for us to work with. And admittedly, Jeff, this kind of came to light because I have a soon to graduate son from the University of Illinois who's getting a master's degree, and he was telling me about how he was doing a similar type of project as for one of his classes. And it just seemed like there was just neat talent to be had that was, there kind of at our fingertips, waiting for that phone call. And there's been great, receptivity.
That's great. Oh, well, it's, what is it? I quoted this the other day to somebody else, but like good writers borrow, great writers steal. Like no shame in stealing a great idea when you come across it. I think one of the great signs of innovators is the ability to not get stuck with like your own idea. And when you see something great, like take it, run with it, improve it, build on it. But that's where a lot of great ideas come from. They don't all come from inside.
Yeah, no, I'm real excited about it. Actually super excited about it. I assume, we're going to get some very divergent viewpoint from these younger people that are immersed in it from an academic perspective.
Yeah, it's certainly an interesting perspective, and I've certainly crossed the Rubicon a few times. I think one of them, of going from being the younger person to being in the old people's bucket. I don't like admitting that to myself, but I remember we looked at our conversion rates for our partners on mobile phones versus desktop. And first of all, I was surprised, like half of the traffic to the application form came on mobile phones. And I thought, who does it? And they complete the form at the same rate as desktop. And I kind of went, I would never do that. What kind of people are doing this? And I thought, oh no, oh no, the younger generation is doing it. And I would never, like, you've got to check that personal bias of like, who would do this at the door and lean into what that younger generation that's grown up with a different technology landscape thinks of, to really sometimes see around the corner about what's coming. So that was one of those where I went, there's no way they're finishing the application on the mobile phone. Like, that would be crazy. And then I was wrong. I was very wrong. And that was a really interesting moment for me to realize how valuable that perspective from a younger generation can be. All right, Charles, I always ask this towards the end, like, is there anything you wanted to talk about or I should have asked or that I missed that you think would be useful for us to cover in this discussion?
That is a great question, Jeff. I think we've covered a decent amount of ground.
Indeed.
I think, right. I think if I leave you with something, it's that fintechs bring some really, really neat things, just different ways of doing business, more efficient ways of doing business, ways of doing business that we shouldn't be scared of. And they also bring a willingness to change. They want to grow. A lot of them are very mission oriented in teaming up in the credit union space. Can really bring together two parties that combined will be very impactful.
Yeah, we certainly agree with that. Well, I appreciate your time. I got 3 questions I close out all of these podcasts with, so I'm gonna throw them at you now. I would say we do them rapid fire, but I'm not good at rapid fire things, so we tend to talk about it a little bit. But the first is, what's the best piece of career advice you've ever gotten?
I think it's that, and it's probably not good to say because I believe Alcoholics Anonymous may use the same slogan, but this too shall pass. This too shall pass. So, when things seem dark, particularly for young people, when it doesn't feel like you're moving forward in your career like you want to or you had envisioned, and you're contemplating jumping ship. I did a lot of that. I did a lot of that in my early days, and I regret doing it. I think my friends that really kind of stayed the course ultimately and weathered the storm and waited for that deck to be reshuffled, ended up having more stability in their lives and ultimately a lot of career success. Not to say that I haven't, but there was a lot of one step forward, 2 steps back. And so I would say this too shall pass. Weather the storm and your opportunity will come.
This too shall pass. You are the first to give me that particular piece of career advice, 50 plus episodes in.
And I should look it up, Jeff, to see whether this is like someone once said, hey, isn't that the slogan from
Great Writers Steal Outright? Charles, great writers steal outright. It's your piece of advice now. I'm sure most of our advice came from somewhere else. Sometimes we remember where and sometimes we don't, but I like that one. It's really interesting. Second question, what's the best piece of advice you've gotten about the consumer lending or consumer banking space in general?
To be open-minded, really referencing back to just how the topics that we covered, to be open-minded about possibilities, to not say this is how it's been done and this is how it has to be done. To be open-minded, to envision a future where things are done differently and that differently does translate into better.
Yeah, that's a super interesting one because I think that's particularly in the finance industry, an industry that's heavily regulated, which can tend to lead to just keep doing it the way we've always done it. That open-mindedness to new ways of accomplishing the same goal, maybe better, is I think is a critical thing. And my last question for you: what's one piece of bold advice, or not piece of bold advice? What's one bold prediction about the future? There we go, bold prediction.
Well, do you want an approximate future, or how far off can that future be?
Yeah, you can make it a couple years off. I mean, you can put it 100 years off if you want. That feels like a long way. I've had everything from like Super Bowl wins to, drones running all underwriting in 10 years in commercial real estate. But I'm curious, not running all, but being involved in all. But kind of anywhere in that medium to longer term frame.
So I would tell you, I think we will see the emergence of a centrist party in the United States. We'll see a third party emerge. The center is a sorely misplaced in America. And I do think that we will break out of this two-party system and we will see a very strong centrist party emerge in the not too distant future.
Now I really want to know what you decided was the time frame you had to operate in, because that's a fascinating prediction. I love it, but like, what's the time
I
frame
would
you
say
think that
we
in?
will see that party take hold within the next 6 years.
6 years. Well, I mean, I hope you're right. I certainly, as you mentioned, have felt myself, depending on the issue at hand, homeless in terms of a political party, because there's just extremes on both sides, depending on what you're talking about.
Right. No, the extremes
A lot of people who feel to the
used to
left.
have their field day during the primaries, and then we would all kind of gravitate back towards the center. But because of a lot of structural aspects of how congressional districts have been formed, that is not the case. But I think America is desirous of getting back to a more stable central approach to politics.
Well, I think you have delivered on bold. For the not for the first time, but certainly as much as ever, I can say I hope you're right. That would be certainly a fascinating evolution. And overall, Charles, was a really fascinating conversation. So I appreciate you taking the time and joining me today and sharing your thoughts and insights with our listeners.
Great. Thank you so much, Jeff.